Welcome everybody to the Daily Horizon View. This is a program where we look at the ASX exchange traded funds. We've got top fives and we've got quite a few categories to go through, so stick around. Our spotlight today at the end is VAS, which is the Vanguard Australia Index Fund. While we're sticking around, this is quite a popular fund now, highly rated, so stick around at the end for a look at that one. We are here to crack your financial sky. We want to give you information and demystify the world of finances. So top 5 percentage rises, we saw ETPMPD, IJR, ETPMPM, INES, and HACK. So our top riser today was ETPMPD, which is the ETF Physical Palladium ETF. And that one is backed up by physical palladium allocated, or held, I should say, in the HSBC Bank in the United States. That is, in the scheme of things, a small ETF with a rough market cap of about $2 million. So we saw a rise today of 1.47%, which equated to $3.04 on a pretty healthy volume for this one of 2,100 shares traded. Okay, kids, let's take a look at the top 5 percentage falls today. We saw Tech, RARI, ZYUS, Core, and ESTX. So Tech is the ETF's Morningstar Global Technology ETF. That'll give you exposure to global developed markets with the Morningstar Economic Moat rating. So looking for tech companies with a durable advantage. The market cap for this one is 90.7 million. We see a reasonable dividend here of about 5.22% when I checked last. So it saw a fall of 7.23%, which equates to $5.54 on a relatively fair to middling volume, I suppose, of 6,500 shares. So quite possibly Tech's getting beaten up here because of the ongoing trade war between America and China. So let's cast our eye over the top $5 rises. We saw ETPMPD, IJH, ETPMPM, IJR, and IHVV. Looks like similar story as our top percentage rises. We saw ETPMPD, which is the ETF's Physical Platinum ETF. Kind of gone over that, but we saw a rise of $3.04, which was 1.47% on a volume of 2,100 shares. Looking over that, IJH and IJR also American focused ETFs, and so is IHVV. So theme is, I suppose, there's people thinking that metals and those things, and also taking a bet out on the current trade talks, I suppose, the G20. So people putting their money into US focused stocks. Top $5 falls. Let's see what we see today. So Tech, Core, ESTX, RARI, and ACDC. So we've kind of, similar to the previous slide, we've kind of done this on the top 5 percentage falls, but we'll just run over this one quickly again. So Tech is the ETF's Morningstar Global Technology ETF, and that'll give you exposure to global developed markets using the Morningstar economic moat rating. So they're looking for companies, I should say, that have a durable economic advantage. Whether that's branding or, their cost of production and things like that. So we saw a fall in tech today of $5.55, 7.23% down, which is quite a sharp drop. You don't typically see ETFs falling that sharply. Reasonable volume, as mentioned before, 6,500 shares traded. So let's cast our eye over the top 5 number of trades. We saw today STW, VAS, hang around for the spotlight on that one. BTS, VAP, IVV. Just a refresher for those who've forgotten, STW is the State Street Spider S&P ASX 200 fund. And that one is designed to provide low portfolio turnover, accurate index tracking, and that should all be delivered to the investor at a low cost. We have a market cap roughly of $3.7 billion for STW. It pays a reasonable dividend of 4.36%. Morningstar give this a bronze, which is like 3 out of 5 stars, if you want to think about it that way. We saw 299 trades today on the downside by looking at it, because we saw the share price down 34 cents or 0.55%. So yeah, pretty much sure VAS was down today as well. So yeah, a few on the down, a few on the up. Top 5 for volume. Let's have a gaze at what we saw here. QOZ, STW, ETHI, IOZ, and FAIR. So QOZ, I should say, if I can get it out, is the Beta Shares FTSE RAFI Australia 200 ETF. And that one tracks the top 200 companies listed on the ASX and is measured by fundamental size. So this one is a sort of mid-size ETF with a market cap of $247 million. You have a pretty healthy dividend yield here of 6.88%. If you're chasing a decent dividend yield, that might be one for you to look at. Once again, this one has a Morningstar rating of bronze, which is like 3 out of 5 stars. Volume-wise, we saw 820,000 shares traded today, or thereabouts, almost 821,000. On the upside, we saw a rise of 2 cents, which equates to 0.14%. It looks like a reasonably strong day for that ETF. People looking to get into the ASX 200. Top 5 for value. We saw STW, QOZ, VAS, IOZ, and VAP. So no surprises here that STW tops the list. Saw quite a lot of volume gone through for that one. So we saw a value for STW of $32.8 million. And as mentioned, it was on the downside, so people are getting out of that fund for whatever reason and possibly moving into QOZ, which also tracks the ASX 200, as mentioned before. And you can also see VAS, which we'll talk about in a minute, tracks the ASX 300 index. IOZ tracks the S&P ASX 200. So top 4 ETFs on this list here are all tracking the ASX 200 or the ASX 300. Moving along now. Okay, let's sink our teeth into the spotlight right now. Our spotlight I've chosen is VAS, which is a Vanguard Australian Shares Index ETF. So Vanguard Australian Shares Index ETF seeks to track the returns of the S&P ASX 300 index before taking into account fees, expenses, taxes, and all the blah, blah, blah. Suitability, I think sort of buy and hold investors seeking long-term capital growth. There's some tax-effective income, and with a higher tolerance for risk associated with share market volatility. So you've got to have a little bit of fortitude in your tummy. That's the same with any type of investing on the stock exchange or investing in general anyway. So the why factor, why would I bother? Vanguard, I think that they have competitive long-term performance. So Vanguard's investment approach provides investors with an efficient way to capture long-term market performance. Diversification, so the fund invests in a diversified portfolio of securities, which means the fund is less exposure to the performance of fluctuations of individual securities. So, you get the average of the group. Low cost investing, the fund has low ongoing fees as Vanguard strive to minimize the cost of managing an operating fund. As we'll see in the next slide, there's been some. So let's have a look at the net asset value as of yesterday was $84.52, closed out just above today at $84.60. Reasonable size market cap for this ETF as it is quite popular. As we'll discuss just in a minute, we see a market cap of $3.8 billion. Management costs, currently it is 0.14%, but on the 1st of July, which is 3 or 4 days from the date of recording this anyway, it's going to drop down to 0.1%, which is quite low. So there's pretty much only one or two other ETFs with a lower management costs listed on the ASX. So you have a distribution frequency, so you get paid some money quarterly. If you are an investor in this ETF, you'll see in January, April, July, and October, there'll be money landing in your bank account. And the dividend yield here is 4.62% or thereabouts. So in my opinion, VS is ideal for long-term investors and it's proving to be popular investing choice among Australians. This is perfectly obvious when I examine the year-to-date and the 12-month money flows. So year to date, we've seen $179 million invested in this ETF, and overall, for the 12 months, we've seen $760.7 million invested in it. So those inflows are quite strong. It's probably one of the biggest, is almost the biggest inflows for both those categories in the whole market. So in the last 6 months, the ETF has risen roughly 17% from December lows, and the rise doesn't even include the dividends that's paid out. The ETF provides a high level of exposure to all of the big blue chip companies listed on the ASX. So VS is a very good option to gain broad exposure to Australian equities from the shop or from Vanguard. Because Vanguard is a specializes in passive investing, so they're arguably the best provider of passive investing. So ETF-based funds. As always, we should be comparing. So you may have a preference for another fund. So. Do some research and have a look at A200, also look at STW and look at IOZ. So we've kind of gone over a little bit STW and IOZ today in the previous slides, so definitely worth having a look at both of those. But there's looks like money flowing out of STW flowing into VAS and IOZ and also A200 So I think STW is probably a loser out of all of that movement. That's my feeling currently anyway. We'll flick through this stuff right now. Yeah, so this is going to be one of the cheapest ETFs on the market. That means more money in your pocket at the end of each quarter. Quick look at the performance. I think this one was roughly run for 10 years, I think. I think it was the date of inception from memory. I think it was May 2009 or thereabouts. May have been April 2009. I can't remember exactly, but roughly it's run just over 10 years. So over the 10 years, you will have seen 9.76%, or since inception, 9.56% annually. And that gets you out over sort of, cumulative, you would have done 150% roughly or thereabouts from memory. So, nice little investment in your ETF, growing your future wealth, definitely with this one. We can see on the right-hand side here the top, 10 or 15 holdings. So there's no names here that are out of the ordinary because we're focusing on the top 300 companies in Australia. Combank, BHP, Westpac, CSL, ANZ, NAB, Telstra, Wesfarmers, Woolworths, Macquarie, Rio, Transurban, Woodside, Goodman Group, and a Newcrest Mining. So no major surprises there. Definitely, I think from memory, Morningstar give this a bronze rating. So I think if you want to look at it as a star rating, that's a 3 out of 5 stars. So definitely worth definitely worth looking at closer, I should say. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational, and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.